Okay, good afternoon and welcome back everyone to our new Options Play Enhance Experience education session. My name is Tony Zhang. I'm the Chief Strategy Officer here at Options Play. And if you are watching this session here today, then you are at one point an Options Play member or subscriber, or you've used a free trial with us in the past. And today what we're here is we are welcoming you back to try us out again for another 30 days. And what I want to take some time out here today is to show you some of the recent additions we've made to the platform, the changes we've made to the Options Play service to hopefully enhance your experience of analyzing the options market and trading it. So today what I want to do is I want to walk you through it. And if you are watching this today, you should have received an email from us earlier today on how to access your Options Play platform. You've already been granted another 30-day access as of today if you've watched this session. And if you have any questions as we go along, please type your questions into the Q&A section, type your questions into the chat window. Our team is here on the session answering any questions that you might have as I go along regarding the Options Play service. So let's go ahead and get started. But before we do, what we are going to discuss here today is purely for education and demonstration purposes. It is not a solicitation or recommendation to buy or sell any of the specific securities that I'll be discussing during today's session. So what I want to show you today is just a variety of changes that we have made here to the Options Play team, the Options Play software. As I said, many of you that are joining me here today have at one point experienced either a free trial or perhaps you were a member, and at some point, you've chosen to disengage with us as a platform. And what I want to do today is to welcome you back. And show you the things that we have done to improve our platform and give you another access to 30 days and see if this is something you might be interested in. So I'm going to show you some of the changes we've made, including to the new Chief Market Strategist position. We've hired a new Chief Market Strategist. I want to talk to you a little bit about the changes that we've made to our research team to provide better ideas and enhance the trading opportunities that you see here in the broader markets, and hopefully provide a different perspective on the broader markets. We have a new Options Play platform. We've automated credit spreads. Many of you like to trade credit spreads, so now being able to automatically find credit spread opportunities in the market instantly using the Options Play platform. The new charting capabilities that we now have, and new portfolio tools that we have, paper trading and contracts calculated that you can now do directly on our platform, and access to a new mobile, Android, and iOS platform. Not only are you going to get access to 30 days of Options Play, you're also going to get a 33% discount to the subscription of Options Play if you choose to subscribe at any point during your 30 days. Not only are you locked in for that 33% discount, you're also going to continue to have your 30-day trial, even if you choose to subscribe and lock in that rate before the end of your 30 days. So many of you have in some way, shape, or form engaged with Options Play in the past, and you've given us feedback on things that you wanted, such as the mobile platform or paper trading or credit spreads or charting. If you don't mind, share with me, which part of this you are most excited to learn more about. Paper trading, trade ideas, mobile platform. Type it into the chat window. I'd love to hear from you before we get started here, what you are most excited in terms of learning about, so that I can spend a little bit of time focusing on that during today's sessions. But I will be going through those, every single one of these things. I've already seen quite a few responses here. Trading ideas, charting tools, automated spreads. So a lot of these types of answers. Okay, great. A lot of you very interested in trading ideas. Great question. Weekly options. Thank you so much. So I will spend some time going over these things with you guys here. But the primary thing that I want you to walk away from today's session is a clear understanding as to what features can you expect from Options Play over the free trial access period that you have for the next 30 days. Really excited to discuss that. So again, For those of you that are on this webinar, welcome back. You already have access. If you're watching this webinar today, you already have access. You can access simply by going to this website here on your screen, which we are going to post into the chat window here. And you can log in using the email address that we sent to you during today's email earlier today. If you click on the link on your screen, you'll be able to log in using that email address. If you've forgotten your email, if you've forgotten your login, when you go to the login screen, there will be a button that says forgot your password. You can go there to reset your password. Once again, we sent you an email earlier this morning. The email address that we sent it to, that's how you can access this particular tool. You'll be able to access the new platform, which I want to spend a little bit of time showing you the new platform, making sure that you see how to access it and make sure you understand the different tools that are available to you within this new platform. But like I said, that's all available to you simply by logging in using the link here on your screen. So again, thank you so much for sharing with me what you want to review. I'm going to go through all of it here today, but you're going to get access to our global macro research. You're going to get access to our daily trading signals. You're going to get access to our longer term macro ideas. This is all included through your 30-day trial. But one of the biggest announcements that we want to make here is the recent addition to our new chief market strategist role, Rick Bensignor. If you may not have heard of him, he has always been on the institutional side. So as a retail trader, you might not have come across him very often, but he was the former chief market strategist at Morgan Stanley for 8 years. So spent a lot of time on the institutional side, guiding institutional clients through the broader markets. And now we've hired Rick as our chief market strategist here at OptionsPlay. And what you can expect from him are two primary things. One, he writes a research report every single Monday. This is a macro-themed, technical analysis-based view on the broader markets, the different sectors, gold, silver, interest rates, commodities, across the board, his views on all of these markets from a technical perspective. And then he also hosts a call before the market open on Mondays at 8:45 a.m., which you can join starting to next week, which we will send you a recording from today's session on for our weekly market call. This helps set up your week so that you have a better understanding of what's coming up for this upcoming week and what to expect from a broader perspective, bigger picture perspective. And then he publishes daily trading signals every single morning. I want to spend a little bit of time discussing what his views on the market, what his views are in terms of how he views the market, the different approaches that he has from an institutional perspective that provides a different perspective than you'd likely see anywhere else, including on CNBC, Bloomberg, or any other newsletter service that you might have seen today or subscribed to. So Rick is now leading our research team, providing guidance to our entire research team, including myself, on how to view the markets. And one of the things I really want to spend a little bit of time to walk you through is why are our trade ideas any different than any other service that you might be able to subscribe to here out in the broader markets? And I think the biggest difference between Rick's work and everyone else is the fact that he spent his entire career on the institutional side. So he has 30 plus years of trading experience with institutional timing models to identify trend exhaustion as it's happening. What does trend exhaustion mean? Trend exhaustion refers to when a stock or an asset is near the end of an individual trend and is simply in the process of starting to reverse. And what you can see here are identifications of when that trend is reversed or when the trend is going to reverse in real time, and identifying those turns, because those are the opportunities that we are looking for. And you could also classify this as what we would typically call a contrarian view of the markets. You can either have a trend following view, meaning you are waiting for the trend to move in a certain direction. And many of you have heard the concept of the trend is your friend. And what you're waiting for is for a confirmation that the stock is moving in a specific direction. So for example, if let's say you waited for the stock to break below the support level, then you can say that the trend is bearish, so let me take a bearish trade. And what that typically does is it increases your probability of success. But what it does is it decreases your risk to reward ratio. The later you wait in this particular trend, the worse your risk to reward ratio is. So what we are trying to do here is identify trend reversals at the instant they actually happen. So as you can see on your chart here, there are multiple 9 signals here. I'm not going to get into how we count these 9s and what that means, but these are the reversal points that we are looking for. They're called DeMark indicators. For those of you that want to read a little bit more about what the DeMark indicators are, Rick and I have actually hosted a webinar on DeMark indicators to give you a better understanding of these particular setups and why we use them. And again, it is all designed to help identify turns in trend much earlier, before the rest of the market, before the trend followers catch on. And at the same time, what it does is it significantly reduces or significantly improves the risk to reward. Because if we're able to enter a trend much earlier into the trend, what we're risking is a much smaller percentage versus the potential reward. If you wait for a trend following method where you might enter here, the risk that you're taking versus the potential reward is much more balanced, versus if you're able to get in much earlier, your potential downside is much smaller and your potential upside is significantly larger. So for those of you that are looking for more information on this, Rick and I host sessions, and we can point you to those individual sessions that you want to learn more about this primary difference and how we set up and find trade ideas. Rick has been using this methodology for the past 30 plus years on the institutional side for firms like Morgan Stanley and Wells Fargo, and has successfully done so in those markets at those firms. And we are very excited, or we are very lucky to have Rick join us on our research team. So these are some of the changes that you can expect from us from a weekly macro perspective, giving you a view as to when markets are likely going to turn from a bigger picture perspective, and then on a day-to-day perspective, providing you with trade ideas, just like this Cleveland Cliffs trade idea that we put out here. This was Cleveland Cliffs, and this was the move that we caught on this because he saw this 9 count pull up on Cleveland Cliffs, and this provided a long signal here. So that's just a quick example of a specific trade idea, and he was able to beat the S&P 500 4 out of the last 5 years by 157% using this exact type strategy, which is almost 3 times the average return of the S&P 500 over that time period. So these are the types of changes that we have made to our research team and our idea generation that provides better ideas, better performing ideas, and ideas that have lower risk for our traders. So what you can expect from us are the daily play trading signals that are now both available to you by email at 9 a.m. each morning, or available through the mobile app. And I'll show you how to download the mobile app here in a few seconds. But like I said, these are generally speaking short-term counter trend ideas. So these are bullish trades in a bearish stock and vice versa. So many times you'll find us bottom feeding in very oversold stocks, such as ARK funds. We went long ARK funds a couple of weeks ago near the absolute bottom. These are the types of trade setups that we are looking for. Instead of buying high and hoping it's going to go much higher, we really look for opportunities to buy low, extremely low many times, using these types of institutional timing models. These are swing trades that last anywhere from a few days to a few weeks. And again, the idea is to really buy low and sell high. So that gives you a sense for the new trading signals that are now being introduced, and you will start receiving this going forward tomorrow morning. If you log on to the mobile app here this morning, or if you log into the platform, you'll start to see our trade ideas in our platform. So with that, what it's a good time for us to do is actually transition to the new OptionsPlay platform. If you haven't used OptionsPlay for the past couple of months, we've now introduced a new version of the OptionsPlay platform. The old one will actually be sunset at the beginning of July here. So you still have about a month, if you will, a little over a month to try out the older platform. But I encourage you to use the new platform because there are a lot of new features available in the new platform, and we're no longer going to support the older version going forward, or certainly not making improvements to the old platform. The new platform is where all the new improvements will be. And I will spend a bit of time here today walking you through these features, especially the features that many of you have requested that I spend some time on at the beginning of the session. But if you don't have to enable it, if you log in today, you will already be on the new platform. But if you want, you can always find it. If you can navigate back to the classic platform and go to your profile and click on preview new app in order to see the new platform. But like I said, if you are watching this webinar here today, we've activated your new platform for you. So when you log in, you will immediately see the new platform that I'm going to show you here today. And there's going to be a few things that I'm going to go over with you here. Portfolio tracking and paper trading. So we've introduced a new portfolio tool to help you track your live portfolio, whether it's a live portfolio or a paper trading portfolio. You can do both using the new portfolio tool. We now have automated credit spread strategies. Many of you love trading credit spreads, and you had to set them up manually before using OptionsPlay. We've now introduced a new feature that automatically finds bullish and bearish credit spreads, or sets up the bullish and bearish credit spread on any stock or ETF that you're viewing. We've introduced a new charting package where you can save your indicators, and you can drawing tools, all of those things, including full screen view of your charts within OptionsPlay. That's all available here through the new OptionsPlay platform. And then as far as the trade signals that we are going to provide you with from the daily play, we also have made some changes to better align our signals that we send out with what you actually trade in your portfolio. And this really has to do with entry details and sizing. So what we do now here is we provide you with the exact strategy, the expiration date, the strike price, and the premium, but we also adjust the number of contracts to trade in a hypothetical $100,000 portfolio where we risk 2% of that total portfolio. So what you're going to see from us when you get a trade signal is not just what to trade, but how many contracts you would trade if you had a $100,000 portfolio while you risk 2% of your total portfolio value. And I'm going to show you a tool that we've built here into OptionsPlay that will also calculate for you, based on your portfolio size, how many contracts to trade. So for example, this Eli Lilly trade that we sent out, we were selling 4 contracts of the May 6th 292.5 285 put vertical for $3.14 credit. And because this trade had a max risk of $436 per contract, we traded 4 contracts of it, which gave us a total risk of $1,744, which is just shy of 2% of a $100,000 portfolio. Basically, what we're not only teaching you is the trade, but how to size the trade appropriately for your portfolio. Arguably, the sizing of the trade is more important than the trade itself. So we'll tell you specific take profit and stop levels based on the stock, based on the options premium, as well as when we actually close out the trade, you will receive the signal not only to open, but also close the trade. And what we also have built here into the tool, into our trade ideas, is the concept of scaling in and out of a trade. Occasionally, you'll see us trade only $1,000 worth of risk because we don't feel that it's time to add a full position there. Or sometimes you'll see us close half the trade because while we want to take some profits, we want to leave the rest open for some additional potential gains. So you're going to see us scale in and out of trades. You're going to see us talk about sizing. This is all designed to help you, give you a better feel for how we are trading the trades that we are sending to you, as opposed to just leaving that to you and having you figure that out. We're providing a template, providing guidance so that you can follow along in a way that's closer to what you would experience as a trader yourself. So this is all included as part of your new 30-day access. So let's talk a little bit about the platform right now. And the first one I want to go through is the new neutral strategies, or the new high implied volatility strategies, which are the credit spreads. So we've now automated credit spreads and straddles that you can see using the platform itself. We've selected your strike and expirations for you, and you can use them for iron condors and butterflies if you want to build more advanced strategies. So let's go over here to the tool itself. Now, when you click, the platform overall still, if you've used this before, remains roughly the same. Trade ideas, watch list, and portfolio on the left-hand side. We have our security analysis panel here in the middle, and we have trading and income here on the right-hand side. And under trading and income, there are now 3 options. Before, there was bullish and bearish, and now there is high implied volatility. When you click on high implied volatility, it will default to a bullish credit spread, a straddle, which is a neutral strategy, and a bearish credit spread. So these are all strategies that are meant for when the market has a high implied volatility, or the stock has a high implied volatility. So if you look at liquidity and IV rank, so IV rank here for Google right now is 56%, so on the higher end of the range. So perhaps now is the time that you might want to sell a credit spread here in Google, and depending on whether you have a bullish or bearish view on the markets, you might choose to either have the bullish bull put spread or the bearish bear call spread. And what we've done here is we've automated the process of selecting the expiration date and strike price based on the best practices that we teach. Many of you have used OptionsPlay before in the past. You might have used our trading you may have used our credit spread opportunity report here in the OptionsPlay hub, which you can now log in immediately if you're logged into the platform. You no longer need to manually log into these tools. You can now automatically get logged in to the credit spread opportunity report using OptionsPlay here in the broader, in the OptionsPlay hub. I know a lot of you have in the past told us that you hate the fact that you have to log into the hub again, even though you're logged into the platform. We have now fixed that, and you can do it simply by going to the Education and Resources hub, going into the hub and seeing all of the reports here, whether it's the credit spread report, the cover call or short put report, the straddle report, earnings calendar, liquidity, unusual volume. This is all available to you within the OptionsPlay hub, and simply clicking on it will give you access to the report. You no longer need to log in order to utilize these tools, as long as you're logged into the platform itself. But many of you have used our credit spread opportunity report here in the past, and when you click on its trade, it'll launch into the OptionsPlay platform. But if you want to simply do it on the stocks that you want to look at, so for example, if you're looking at, you're looking at Bank of America, you're seeing that banks are up today and you want to take a bullish put spread, you can click on the high implied volatility button. Once you do so, it will automatically select the expiration date and strike prices for you. You can modify this if you want and look at the bid-ask spreads and see what your potential reward is, what your potential risk is, and be able to compare this to any other strategy using the P&L simulator and simulate what happens if the stock moves higher, how much you can expect to make or lose from any of these 3 strategies side by side, and understand what your risks and rewards are before you place that trade. But this automates the credit spread for you, selects the expiration date and the strike price on the platform itself. And all you have to do is click on the symbol or select the symbol and click on high implied volatility to select the new credit spread tools. And like I said, it includes both bullish and bearish spreads. Any questions on credit spreads before I move on? But this really is designed to help you automate the credit spread opportunity. Many of you said that you want to find out more about credit spreads, so just want to make sure I cover this fully before I move on. But like I said, We built this because we wanted a way to quickly, instantly see the expiration date and strike prices. If we wanted to sell a credit spread and we wanted to do it by the click of a button, that's exactly why we built this tool. A great question here is, what is considered high volatility? Generally speaking, I would say when IV rank is greater than 50%, that's when we consider a high implied volatility environment for that specific symbol. So we built the IV rank so that you can measure that, so that you can type in any symbol and see what the implied volatility for that specific symbol is at the time. There's a question. So for example, if you look at Tesla right now, very high implied volatility rank, perhaps a good time to sell credit spreads on a name like Tesla. Will you be adding debit spreads? Debit spreads are under bullish and bearish. So if you click on bullish, you'll see the debit spread here for the call debit spread, bearish for the put debit spread. So the put debit spreads or the call and put debit spreads were already on the platform. What we're adding here are the credit spreads now. So you have access to all debit and credit spreads instantly for any symbol that you type in. You just have to select the directional view that you have, whether bullish, bearish, or high implied volatility, which gives you both bullish and bearish credit spreads. Yes, over 50 on IV rank is considered a high implied volatility environment for a specific stock. Okay, perfect. Okay, so that is the credit spreads. That's how you can use credit spreads for your trading with our new platform. Moving on, the new charting feature. A lot of you asked about this, and a lot of you over the years have asked us for more charting features. So what we've added is a new charting package. On the surface, it looks the same, but as you can see, when you pop it out, you can now go full screen. Before, you couldn't go full screen with the chart, so now you can go full screen. We've added a ton of studies to the new charting package that you can add to it. And whatever you add onto your platform will save when you log out. So if, let's say, you want to add an Ichimoku cloud, you want to add a MACD, you can do it very quickly using the new platform. And when you log out and log back in, these settings will save. So your indicators will save on your platform. You now also have access to different time frame charts, and you now have drawing tools. So if you want to draw things onto your charts, you want to measure, you want to draw Fibonacci retracements, arrows, annotations to yourself, you can do so using the drawing tools, and you can save all of that here in the tool. You have access to different things like different types of charts. If you want to use Heikin-Ashi, you want to use bar chart, you want to use line chart, all of this is now available to you here, including point and figure charts if you want, that you can use using OptionsPlay and our new charting feature. So this is a much more powerful charting package and includes a lot of the things that many of you have asked for us over the years, such as better indicators and the ability to save your indicator and draw and go full screen. It is now all available to you in the new charting package on the new platform. So any questions regarding the charting package before we move on? Can you add text? Yes, you can add annotations, you can draw arrows, you can draw lines, you can do all of that using the new platform. Gohart, thank you so much. Portfolio tracking and paper trading. So this is a big part of what we've added to the new platform. A lot of you have been asking us about portfolio tracking or being able to upload your own portfolios and paper trading. So this is now all built into a single one. What you can do is you can create your portfolios, and what I've encouraged you to do is create as many portfolios as you want. So for example, if you have 3 different brokerage accounts and you have a paper trading account, then you might want to create 4 portfolios, 1 for each of your live accounts and 1 for your paper trading portfolio. And what you can do is you can add positions to your portfolio by finding the trade and clicking on the add button, which I'll show you here in 1 second. And you can track your positions and edit your portfolios very easily using the new portfolio tool. So Let me just show you how to do all of that here in 1 second. So if you click on your portfolio tool here on the upper left-hand corner, first thing that you do if you're using this tool for the first time is click on the Manage button here in the portfolio tool. Okay, if you're first time using it, click on the portfolio button and click on Manage here to the right. And when you do so, it'll take you to the portfolio part of your profile. And this is where you can create new portfolios. As you can see, I have a paper trading portfolio, I have a Schwab Live account, and a TD Ameritrade Live account. You can create as many as you want. So if you have a Tasty Trade account, an IBKR account, just create as many portfolios as you want, simply just naming your portfolio. So for example, if you have an interactive brokerage account, you would just simply type that in and click on Save. Okay, and you can manually add positions to your portfolio here very quickly by typing in the symbol. So for example, if you just type in the symbol, click on Add Position, it will allow you to add positions here for Goldman Sachs. You can select your call put, the quantity, expiration date, strike, and cost basis. But I think that there's a much easier way to do so. What you simply do is you use the platform. So for example, if let's say I bought let's say I sold the credit spread here on Goldman Sachs here today, right? Let's say I sold the July 315-290 put vertical here on Goldman Sachs. What I can do is I can simply click on the trade button. I can select my account that I want to add it to. So for example, if I traded this in my IBKR Live account, I can simply go and click on Add Position, and this position will now be added to my IBKR position. I don't have to do any of that work manually. I just simply go to my account and I can see my trades in my, let's say, IBKR account. For example, in this particular case, you should see my short July 1st, 315-290 put vertical here for Goldman Sachs. And what it'll do is it will basically track the portfolio, this position for me in my portfolio. And you can view all of your portfolios, you can view one at a time, and do so using this portfolio tool. This portfolio tool is designed to help you look at positions from a summary basis or dive down into individual leg basis and be able to track the unrealized P&L of all of your open positions here very easily in one screen. And you can do this across all of your portfolios. So if you're managing multiple portfolios, I highly recommend that you set up this so that you can actually have one place where you can view all of your portfolios at one place in one screen. So for example, if you just want to look at all of your positions across all of your portfolios, you can do so. And every single time you place a trade, you just simply click on the trade button here. So for example, if you bought this put here on Apple, click on the trade button, select the account that you want to add it to. Maybe you want to add this to your paper trading portfolio or your Schwab Live account. You just simply click on Add Position and it is done. And you can always manage any of these specific positions by clicking on the Manage button. You can edit the account that it's in. So for example, if you bought this instead of at $8.55, let's say you bought this for $8, then you can select the cost basis for it or change the cost basis for it and click on Save. And when you go back to the app here and you go to your portfolio, you should see the new cost basis for the position that you now have for that Schwab portfolio. So if I go back to my Schwab portfolio, as you can see now, my cost basis has changed to $8 as opposed to $8.55. And the new unrealized P&L reflects my original cost basis or my true cost basis on this particular stock. So this is our first step in providing the portfolio tool. The next step that we have here is actually to automate this process. Now, we have tried in the past to build links to different portfolios through aggregators so that we can provide a single link to all of your accounts. Unfortunately, most of those aggregators are unfortunately terrible at options positions. They're not built for options positions. There were a lot of data problems where they would work for certain brokerage firms and not for others. So we simply decided to sunset those technologies because they didn't work. So now what we are working on is building individual links to different brokerage firms. So we're going to focus on the ones that most of you have accounts with, which are TD and Schwab, then Fidelity, then E-Trade, then Interactive Brokers, and other platforms based on the popularity of them and whether or not they provide the ability to directly link to their portfolios. But TD Ameritrade is going to be first because most of you have accounts at TD Ameritrade, or more of you have accounts at TD Ameritrade than other firms. So the portfolio tool is a work in progress, but it is a step in the right direction of allowing you to quickly add positions to your portfolio and tracking it, and then automatically linking that in the future. But as part of that, one of the great features is that you can now paper trade very easily. So if you're brand new to a strategy, if you want to test out a specific strategy, let's say you've never traded a call ratio before, if you've never traded an iron butterfly before, what you can do is you can set one up, test it out. So let's say you're bullish on Apple and you want to trade an iron butterfly here for a move higher here. What you can do is you can click on the trade button and say, I want to add this to my paper trading portfolio because I've never traded this before. And when you click on add positions, you can now have this iron butterfly in your paper trading portfolio, and you can track this trade and see how it does over a period of time. And this is really, in my opinion, a great way to learn new strategies and utilize our platform for that educational concept, because at all times, as an options trader, there's new things to learn. As markets change, you need to adapt. And those are some of the things that you can do and be able to improve your skills using the paper trading feature here at OptionsPlay. So the new portfolio tool is a big part of the changes that we've made, and hopefully it's going to go a long way in helping you manage your portfolio and learn better using the new paper trading feature. Any questions on the portfolio or paper trading features before I move on? You know, a lot of you asked about automated credit spreads. A lot of you asked about portfolio tracking. So hopefully these are all the things that you guys were looking for that wasn't available on OptionsPlay before, that we have now included to hopefully provide you with the tools that you need. Okay, so the next thing I want to go over here is, arguably, as a market strategist over the past 16 years, one of the most important elements of success to trading, outside of your strategy, outside of your ideas, outside of what you choose to trade, is the ability to manage risk. We find that most retail traders do not stick to the rules that they put in place for themselves for managing risk, meaning controlling how much they risk as a percentage of their portfolio. So what we wanted to do is not only in our trade ideas exemplify to you how we manage risk, but provide you with a calculator so that every single time you place a trade, you are no more than one click away from automatically calculating the number of contracts that you should be trading on that one strategy. So if you go to your portfolio, your profile, what you're going to see is a setting here for risk and income settings. You can also find this when you go to your risk and investment calculator. So on your platform, you will see a risk and investment calculator. When you click on the risk and investment calculator, there will be a button here at the bottom that says you can adjust these defaults in your portfolio. So I suggest that everyone here, after you finish here today, or if you're logged into the platform right now, go to your risk and investment calculator, click on this button here at the bottom to adjust your defaults in your profile. And what you should do is you should put in how much your portfolio is worth today. If you have a $500,000 portfolio, enter that amount. And what you should do is risk no more than 2% of your total account value per trade. You can modify this. So you can go lower if you want. So if, let's say you're just starting out with options and you're not sure how to go about doing so, and you're just testing the waters, maybe you want to adjust to 1%. If you're an extremely experienced options trader, you may adjust this a little higher. If you're a professional, we tend to find that some traders will risk up to 5% of their total account value per trade. But generally speaking, my suggestion to you, if you're starting out, whether you're starting out, you're an experienced options trader, I recommend that you start with 2% of your total account value that you risk on any given trade. And there's a lot of math behind it, because the difference between 2% to 4% is not double in terms of the risk that you're taking. The risk is exponentially higher. And that's really, really important concept to understand, is that losses are effectively compounding, and you need to make sure that you have the ability to manage risk. So this is a tool that we have built that allows you to set your account size and how much you're willing to risk per trade. And you simply save this as default here on the right-hand side. Once you do that, every single time you place a new trade, regardless of whether you're looking at an iron butterfly, a debit spread, a credit spread, all you have to do is click on the risk and investment calculator and click on the calculate button, because this is now going to pre-fill for you based on your account size and based on the percentage you're willing to risk. So 2% of a $100,000 portfolio is $2,000. This automates this process for me. So when I click on the calculate button, it automatically lets me know that I can sell 51 contracts of this iron butterfly. I can buy 2 contracts of the put, and I can buy 3 contracts of the put vertical. All of these 3 strategies will have a max risk of just shy of $2,000. This way, I don't have to manually figure out every single time I place a trade how many contracts I can trade. I know that this tool instantly calculates it for me based on my risk tolerance. This is what we use for the daily play to calculate the number of contracts that we trade, and you should be using this every single time you place a trade. And if you do so, I can almost guarantee you that you won't have any positions or come across a time where you quote unquote lose big on a position, because you are preventing yourself from losing big by managing risk before you get into the trade. You should never have a trade that necessarily loses big. If you are losing big on a trade, that means you've traded too many contracts to begin with. And I cannot tell you enough how important this is. This one feature is to the success of your trading. And many of you that have watched my sessions before on this topic, you can understand why I'm so passionate about this, because I, over the last 16 years, have seen hundreds, if not thousands of retail traders in some way, shape, or form go through very, very painful drawdowns. And those painful drawdowns were not brought on because they had a bad understanding of the markets, they had a bad reading of the markets, they had a bad strategy. It was because they simply traded too many contracts or simply bought too many shares of a stock based on the size of their portfolios. And it's really a tool like this, a simple tool like this, that fixes all of those problems. You have to use it, even though the tools are there, you still have to use it. But we are hoping to make this process as easy as possible for you so that you are no more than one click away. Simply click on the calculate button. You don't have to enter the amounts anymore. You just click on calculate and it automatically calculates the number of contracts for you. If any of you can relate to this, where you've blown up in an account or experienced significantly larger drawdown than you should have experienced because you got too confident and traded too large of a size, please type 1 into the chat window. And I know I'm going to see a lot of 1s because I have worked with hundreds and thousands of traders over the past 16 years that have gone through this experience, this exact experience of saying, I really believe in this trade. I have a high conviction in this trade, so I'm going to trade a large size. Guess what? The market doesn't care what you think about, a specific trade or a specific idea. When the trade goes against you, then sometimes the trade goes in your favor and you win big, but it's that time that goes against you that causes you to blow up a significant percentage of your portfolio, or you're trading large all the time and you just have one bad month that really wipes you out. That's usually the 2 main cases that I come across the most. And this tool is designed to prevent you from doing that, because even if the trade really goes against you, you've risked 2% of your total account value. You still have 98% of your total account value left to try to get yourself back to break even. And when you only lose 2% of your total account value, you can get back to break even pretty quickly. You lose 15% of your account, getting back to break even much, much harder. So this is all designed to help you prevent this. And this is such a small feature in OptionsPlay, but arguably more important than anything else that I'm teaching you here today. And we built this to try to make your ability to manage risk as simple as possible, just a single click. So again, if you're on your platform right now, I recommend you go to the risk and investment calculator. It takes 2 seconds to set this, 2% and your account value. That's it. Those are the only 2 things that you need to put in. Click on save, and then every single time you go and analyze a trade, whether it's a daily play, whether it's your own idea, whether it's a newsletter that you subscribe to somewhere else that's telling you to buy these puts or buy those calls or buy this credit spread or debit spread. Use OptionsPlay to analyze it and calculate the number of contracts before you go ahead and place that trade. That's going to help you stay out of trouble more so than anything else that you could possibly use here at OptionsPlay. So I spent enough time talking about that. So hopefully this gives you some understanding. And this is really going back to the scaling in and out of positions conversation that we were having earlier about our daily trading ideas. Well, we send out our ideas and we show you how to scale in and out of those trades. So when you click on the calculate button, it'll calculate, for example, you could sell 6 of these put credit spreads, 10 of these call credit spreads, and 2 of these straddles. So regardless of what strategy you're trading, you know how many contracts you can get in. And that means that if you're maybe not as convinced of the trade, or maybe you think it's a little early, you can scale in, right? So instead of selling 6 contracts, maybe you only sell 3 contracts. You start with half the position. And then as the trade either goes in your favor or against you, you might choose to either close out half the position and say, you know what, that didn't work out, but I risked half the amount. Or this trade is starting to work out. Let me put on the other half now and sell the other 3 contracts. Or if let's say you're in the 6 full contracts and now it's time to maybe start taking some profits, but you think there's still a good chance that you might make more, well, close out half the trade, close out 3 contracts, and then leave the other 3 left. So we also will teach you this process through our daily plays. You're going to see their daily plays where we'll tell you we're opening half a position now, or we're closing half a position. And because we tell you how many contracts we entered, we'll tell you how many contracts exit. So in the Eli Lilly example where we sold 4 credit spreads or 4 contracts of the credit spread, when we're ready to close, we might tell you we're only closing 2 contracts right now. And you're going to see that in our daily play portfolio. Our daily play portfolio now tracks the number of open contracts that we have. So you can see whether we have a full position or a half position on in our portfolio. And this really allows us to not necessarily be all in or all out for an idea. We can kind of scale in and scale out, which is an important aspect of being able to trade in these types of very volatile markets. And lastly, many of you have asked us about access to an iOS and Android platform. So we have now launched both iOS and Android, and you can now download both of these in the respective app stores. So whether you have an iPhone or an Android, you can now go log into your app stores, search OptionsPlay, and be able to download the mobile app. Your credentials are the same as your desktop app to log in. You'll be able to see our daily played ideas. You'll be able to see our upcoming webinar schedule. We're now launching Portfolio inside of the mobile platform. So there's a lot of stuff coming along. You can use a basic strategy editor, and we are continuously adding new features into the mobile platform. So this is now all available to you here as part of your 30-day access to not only the desktop, but also the Android platform, our iOS and Android platform. So just to wrap up, I covered a lot of things, and this is just scratching the surface as to what's available to you for your 30-day access. But you have access to the full platform, mobile, desktop, all of our research from Rick Benson-Yor, the daily trading signals, the weekly macro research, Thursday education sessions with Jessica Inskip, our new director of education, and myself. And all of this is available to you here at OptionsPlay. So if you're watching this webinar here today, you already have access for 30 days. You just simply log in at app.optionsplay.com. We will post this link here into the chat window so that you can log in immediately after today's session and take a look. And you can send us your questions regarding the platform if you want on the OptionsPlay platform. When you log onto the platform, on the upper right-hand corner, you'll see this button here for Ask Us Questions. You can send questions directly to us and our support team that are on the session here today. So if you have some questions, type them into the Q&A window, type them into the chat window. They're here to answer your questions. But if you have questions as you're using the platform, feel free to send us your message here using the questions section here in the upper right-hand corner. And like I said, check out the Education and Resources Hub. We're continuously improving this process to make it a little easier for you. But like I said, you can access the credit spread opportunity report, the cover call and short put report for those of you accessing the wheel strategy, earnings calendar for the upcoming earnings season, knowing what's coming up. This is all available to you in the Education and Resources Hub. And like I said, we've recently made changes so that you can access all of these reports without having to log in again if you're already logged into the platform. Or if you log into the hub and then you go to the platform, you'll automatically log into the platform itself. So it works both ways. So regardless of how you start your day, whether you start on the hub or you start on the platform, you don't have to log in both places. One place will get you logged into both. Okay, that covers most of what I wanted to share with you for today. Like I said, this just scratches the surface now, and for those of you that are joining us here today, for those of you that are embarking on your 30-day free trial again, you'll be receiving email communication from us over the next 30 days, where I will be showing you more of what's available to you in the OptionsPlay platform. What I've shared with you today is only the new stuff. There's a lot of stuff that you already had access to as part of your free trial before, or if you were a member before, you already experienced that. That still all stays the same. This is just the new stuff since you've joined with us. So hopefully today, this gives you a better understanding of the improvements we've made to the platform, the improvements we made to this company, and what you can expect going forward. So at this point, what I'll do is I'll turn this over to Q&A. I'll try to answer some more questions that you might have regarding OptionsPlay. If you don't mind, type your questions into the Q&A window, and I will answer your questions out of the Q&A window here. Susie saying credit spreads, I want more. Susie, I hope that we answered your prayers about wanting more credit spreads. This is now available to you on our platform. Just a click of a mouse and you can see credit spreads. Selling credit spread strategies, what strikes to choose? That's exactly what the new platform does. It automates the credit spread, tells you exactly what expiration date and strike price for the credit spread. Are there cheaper trade possibilities? Yes, Kurt. So, one of the best ways to do that is if you go to your the hub, which you can find by clicking on this button here on the on the upper right-hand corner, and you go to the credit spread opportunity report, for example. What you can do is you can simply sort this based on the width column. The width column gives you the amount of that you're risking, right? So for example, on XLF here, you're risking in this particular case less than $100 a contract. EFA, you're risking about $110 a contract. So you have plenty of options that risk less than $500 or less. So on this XLF trade, you can trade multiple contracts on XLF. These are all trade opportunities. So basically what you want to do is you simply want to select stocks with lower price. When you go to trade ideas, when you go to watch lists, you can sort based on price as well. So if you want to simply look for trade ideas that are lower priced, you can do so. You can still select large cap, mega cap, if you will, and only trade the ones with the smallest price. So Lucid Group, for example, if you're looking at Lucid Group, this is an $18 stock. When you look at opportunities in this, your max risk is going to be, generally speaking, pretty small. So as you can see here, I'm risking $288, risking $232. So I can even trade multiple contracts of this strategy here on the right-hand side. And you obviously have a $500 risk. So this is 2 contracts of the debit spread. So you have a lot of choices, even with a small account like $500 or less. Could I use a deep in the money debit spread? You absolutely can. I don't know why you would, but you absolutely can. If the market is going down, does cover calls and puts to open still work? So James brings up a really good question. He's asking, in this current market environment, what changes should you make to your option strategy? So James, I hope that you'll join me and Jess next Thursday on our Thursday education session, which is on June 2nd, where we are going to cover exactly the changes that we think you need to adapt to in this changing high volatility environment. I'll just give you a bit of a preview here. What we encourage investors to do is to look at shorter dated option strategies as things really get volatile. Because what that allows you to do is to simply take a shorter term view in the broader markets with less risk and simply be in and out much quicker, because you're going to find markets are down 3% one day, up 3% the next day. You have to be nimble. You have to trade with the changes in the trends. And the only way to do so really is to use a shorter dated option. So we're going to cover option strategies that expire in less than 10 days on that June 2nd expiration. I saw before we got started someone asking about weekly options. So that's exactly what we're going to do. We're going to look at options that expire in 1 week or 2 weeks as shorter dated strategies for this volatile market. So great question. And that is something we plan on providing some education on. Any backtesting features? So right now we don't have backtesting features, and this is not because we don't want to offer backtesting features. It's the fact that to backtest option strategies requires many times hundreds, if not thousands of parameters. And these are simply parameters that are just impossible for most people to be able to utilize properly. And this is why we tend to do the back testing and show you the end results. So every single strategy that we talk about, from a credit spread, debit spread, long call, long put, the reason that we choose our expiration date and strike prices, and the reasons that we choose the rules around exit strategies is because we have back tested the thousands and thousands of different parameters around options back testing. There's just too many parameters to offer this as a retail offering, unfortunately. And that's why you generally don't see back testing tools available. And any back testing tools that generally are available for the retail public are very, very, very slimmed down, narrowed versions where you have a few choices that don't really provide true insights, in my opinion, to whether the strategy was right. It's just a matter of what the performance of the strategy is. You don't get to actually choose the strategy itself. So for those reasons, and for those of you that really do want to look at back testing, I can point you to ORATS, ORATS, Options Research and Technology Services. It's a firm that provides options backtesting. You can sign up. I think it's $99 a month for options backtesting. You get a certain number of backtests. But what you quickly realize is that, with the number of backtests that you get, you're just scratching the surface on a single strategy, because across the thousands of parameters that you can customize, let's say you get 100 backtests for the month, you're going to run through those 100 backtests in a matter of a few days. You're not truly going to be able to backtest all the different parameters that you want. And this is why we built our own backtester, and we have our own servers to do backtesting. And sometimes it takes days to finish a backtest. It's just not something that I think your average retail trader, one, has the capacity to do, or has the capacity to really try to do, in my opinion. How do I adjust the total account value in my portfolio goes up or down? You just simply change the portfolio value as it does, right? So, one, I hope that your portfolio value doesn't change drastically, because if your portfolio is trading drastically, that means you're probably taking on too much risk. But, let's say today it's worth $100,000. 2 weeks later, it's worth $110,000 because there's been a really strong week. You just simply go back into the tool and type in your $110,000, and maybe next week it's down to 105. You want to make adjustments, you can do so. I would say that you need about a 10% change in your portfolio value before you really need to change that feature. But you just simply log into your portfolio, type in the new amount. Like I showed you, it literally takes 2 seconds to do. But I highly encourage you to do so. At the end of the 33, I think we've already answered that question. Spencer, would it be possible to have a chart of implied volatility for a given stock? Spencer, so great question. So this is something that we are going to be adding to the mobile platform. It's not something that we currently see, or sorry, we're going to have a mobile first access to that rather than on the desktop. But this is something that we are looking at adding. If you had a specific IB SKU you're looking for, I'm happy to kind of explore that and see if we can potentially add that to our tool. That is currently not in the roadmap. Thank you so much. Ken, thank you so much. Can we look at Canadian stocks? So Neil, you know, there's a version for Canadians. You can go to optionsplay.com/TMX. That will give you access to the Canadian version of OptionsPlay. We don't have the new version out yet for Canada, but it is already in the works. I just saw the login this morning for the new version of Canada. So this is coming. This is probably about at least a month away, but this new platform is coming to Canada. Which broker/trader will allow to use these strategies with a small account? So under $25,000, you absolutely can trade credit spreads. You know, the minimum is $2,000 because that's the minimum for a margin account. So if you have under $2,500, you know, I would say, first of all, Tasty Trade is one that I would certainly prioritize. TD Ameritrade, those are two that will likely give you access to trading more strategies than any other firm like Fidelity, Schwab, or E-Trade. Tastyworks and TD Ameritrade, I would say, are the two that I would look at first. BWB possible? I'm not sure what BWB is, Michael, if you don't mind clarifying. The risk analysis does not seem to work. If you don't mind clarifying, what do you mean by the risk analysis? Because it certainly does work on my end. If you go to the risk and investment calculator, you will see the profit, return, and loss as you move your dollar amount, as you move your time, and as you move your volatility. All of that affects your potential profit and your return. How to use a straddle report and the liquidity report. Well, the liquidity report you don't really need to use anymore because it's all built into the platform itself, right? So when you type in a symbol, it will tell you the liquidity of the option, of the symbol itself. The question was, how do you use the straddle report? The straddle report is also something that is now built into the platform itself, but it basically gives you a sense for where you can sell straddles or strangles that have the highest amount of premium in this current market environment. So as you can see, we have both strangles and straddles. And what it does is it shows you how much you're collecting as a percentage of the stock price. So for example, on Roblox right now, if you sold a $30 straddle on a $30 stock, you're going to collect $8.28. And you know, that's a pretty sizable for July. Let's look at Roblox, RBLX. You know, we saw Roblox recently obviously decline significantly on earnings. Move quite a bit here on earnings. So if let's say you sold the July $30 straddle, right? Here at the moment, you're collecting $8.30 on a $30 stock. What that means is the stock really has to move such a large percentage before you start to see losses. So as you can see, the stock has to reach $38 or $23 here to the downside, $22 here to the downside before the strategy starts to see a loss. And just to put that into context, you know, 8 out of 30 is 26%. The stock has to move 20% higher, 26% higher, or 26% lower between now and expiration before the strategy sees any losses. So that's what the straddle report is designed to do, is give you a sense for where can you collect the most premium selling straddles on a specific stock. Not everyone here is here to comfortable selling straddles and strangles, but that's what this report tells you, is where you can sell, where you can find the most premium selling straddles and strangles. So hopefully that answers your question about how to use the straddle and strangle report. Can the risk graph be expanded to show exact numbers? So it does show exact numbers. You can just move your mouse over it and you can see those exact numbers. The edit of studies does not work when in full screen, only when not popped out. Um, uh, I've clicked on the studies button, and as you can see, I can edit the studies here in full screen. If you don't mind, send us an email or send us click on the questions ask us button, send us your browser and what browser you're using, and we can take a look, but we have not seen that issue here on our end. Are there features in portfolio to handle change positions such as rolling? Yes. So if you go to your portfolio and you click on a specific position, you can simply click on roll position. So as you can see, you can roll this position. And then you can click on trade and then add this to your, for example, Schwab live account. And you can roll this from, in this particular case, we rolled it from the July to the August. So as you can see in my Schwab account now, automatically the July puts are gone, and now I have the August puts. So any rolls that you make in your position here, let's say I want to roll it now from my August to my September, I don't know, 150s, right? Then I simply click on the trade button. I go to my Schwab account, I add this position, and now as you can see, when I go to my Schwab account, it will now show my September 150 puts. So any rolls that you make will automatically be reflected in your portfolio as well. Broken wing butterfly. So I mean, you would have to create your broken wing butterfly, but absolutely it's supported, right? So if you click on modify, you go to butterfly, long put butterfly here, and you want to change your strikes so that you have a broken wing butterfly, you can do so and click on the trade button and add it to your portfolio or your paper trading tool. So yes, broken wing butterflies are supported. Are your straddle, strangle, and credit spreads based on selling at the money or slightly out of the money to reduce risk? We have back tested this to ad nauseum, and from our perspective, selling credit spreads out of the money, you're almost never going to. You're not reducing your risk. You're actually increasing risk, because the further you go out of the money, the more you're risking as a percentage of the premium that you have at. So for example, if let's say we use this, right? If I sold the 140, 130 puts here on Apple, I am risking $710 for $290 in premium. Not a particularly good risk reward ratio, but the further I go out in time, the more I'm risking for my strategy. So that's why we sell at the money credit spreads, because you're actually risking less than if you were to sell something that's further out of the money. In the risk analysis, we don't see how many contracts to buy. If we say 2% of 45,000, we don't see more than one contract. I'm not sure I understand the question, because if you see only one contract, that means that that's the most that you can trade. And chances are, if you trade one contract, you might actually be risking more than what you can risk. So if you see no more than one contract, then you should not trade more than one contract. Chris, yes, you can still do it through first trade. For edit of studies, if you select moving averages and you want to change it from 9 to 50, it seems you can only do so when not popped out. Please send us that scenario again into the Q&A window, and we'll try to answer your questions there. It sounds like you have a very specific scenario that you're trying to do here using the charting package. Raku, also, if your question is about accessing the hub, send us a question here in terms of exactly what you're seeing, and we'll help you out with that. And just to remind everyone here, again, you have access to everything here by going to app.optionsplay.com that I'm showing you here today. And if you do choose to subscribe at any point, you also have a 33% discount to our tools. 33% discount to signing up for a membership here at OptionsPlay. Okay, with that, I have taken enough of your time here this afternoon, over an hour, but I do want to thank everyone for taking the time out here this afternoon. I really hope that this was helpful in giving you an understanding as to what we have changed here at OptionsPlay, what improvements we are making to make your options trading as pleasant, as profitable, and as smooth, as intuitive as possible. That's our goal. Our mission is to advocate for the responsible use of options so that you are more sustainable in the long run and profitable in the long run. And we have built tools around it to try to help facilitate that. And we welcome you back to test things out for another 30 days and see and give us your feedback. Let us know what you like, what you don't like. We're here to continuously improve. We've made some great hires here to our team so that I can focus on building better products for you watching here today, not only from a trading perspective, from an education perspective, and from an idea generation perspective. You know, as the former chief strategist here at OptionsPlay, I've transitioned over to chief strategy officer so that I can focus on really looking at all of the aspects that are important to you as traders, you know, not just the idea generation aspect, but the platform, the education, and making sure that we have all of those things for you. So thank you so much for your time. I hope that you enjoy the session over the next 30 days. And I hope that you'll be joining me and Jess for education. You'll be joining Rick in the mornings for market insights and trading ideas. And Prakash on Fridays to give you a better understanding of the markets and how the week is wrapped up. You know, we've continuously expanded the team to provide these types of things for you so that you can better navigate the markets. So with that, thank you so much. Have a great afternoon. I will send you both the slides and the recording so that you can watch this again at your own pace and make sure that you understand all the tools that are now available to you. So with that, thank you so much and have a great evening.